From one power company to another, outstanding performance coming in from Tata Power. Strong set in the second quarter, well above street estimates. The company has clocked in a sharp improvement in the Indonesian coal mines as well. EPC margins have done well. Discom earnings have done well. Joining us now is Mr. Praveer Sinha, Managing Director and CEO of Tata Power. Good morning, Mr. Sinha. I rattled off all the brilliant performances, but let me start with one that's obviously not done well, which is margins, and I guess that's because of coal cost. Can you give us an idea of how margins might pan out for the second half?
Good morning, Lata, and first of all, happy Diwali to you and all the viewers. I think you rightly mentioned revenues have gone up, EBITDA has gone up, PAT has gone up. And there has been some pressure on the margins, primarily because some of our EPC projects, which we were anticipating to close during the quarter, we could not do. We expect that now we will be able to close it in Q3 and Q4 and ramp up our margins in EPC projects. Also, some of the cleaning up that we are doing up in our distribution business, especially in the Odisha Discom, all those results will start coming in the subsequent quarters. So there's a lot of cleanup that we've done. We've changed meters, the collection has improved, but many of them are still work in progress, and we will start seeing the benefit of it. Our rooftop business, again, there were supply chain issues. Margins were impacted in the first quarter and second quarter. But subsequent orders that we have got are very good orders. We've got a great order backlog, and which we will execute. So I think what we need to see is in terms of what are the foundations of the company and directionally where we are going. And if you have seen, this is the 12th consecutive quarter of growth in PAT, and we are only improving every quarter and improving our performance. So I think we are in a very good we have a very good momentum and very good track, and we'll be only improving from what we have been doing in the past.
Can you tell us about the Mundra legal position? You're able to collect extra costs, but it looks like it's a temporary SOP. When are you expecting that it will be full and proper?
So I think Mundra, some of the issues have been decided in the interim order from CRC, and the final order is awaited in November. And I think whatever gets decided, especially in terms of the cost pass-through for coal and the fixed cost and the capacity charge, all that will become the future baseline for which the supply will take place. So this is the reality which will get established going forward, and since it's decided by the regulator, it will get implemented and accepted by
the
all.
interim is a full cost pass-through?
Right now, they have said that, but we are waiting for the final order, and we will get to see what is the final arrangement approved by the regulator.
Okay, all right. Mr. Sinha, since you touched upon Mundra, let's focus on that. What's the under-recovery from the Mundra unit? What was the loss that was booked in the last quarter? And if you could give us a timeline, when do you expect the CERC to revert back on that Section 11?
I think CRC has already heard the matter, and it is reserved for order. So I do expect that in next 4 to 6 weeks, we will get the order. Right now, there is a difference between what was the interim tariff, which was notified by Ministry of Power, and what is the actual cost. Once that gets determined by CRC, that will be the way future transactions also will happen with all the beneficiaries. Because mind you that Mundra continues to be one of the low-cost producers and continues to be one of the biggest suppliers of electricity to Gujarat and some of the other states also. So the necessity of Mundra is there, and with the type of increase in demand that we are seeing in our sector, this will continue to supply reliable and efficient power to all consumers in future.
Okay, Mr. Sinha, can you give us some perspective on the EPC? You said some orders that you expected you would book could not be booked in second quarter. Give us a 360-degree perspective. How much are you expecting by way of revenue there? And how much in terms of margins? What's the order book looking like for the future?
So just to give you an idea that the steel prices and the other commodity prices had gone up in the last, I would say, about a year. They have come down by nearly 25% in the last quarter. And we have now gone and booked all our requirement of steel, copper, aluminum for the coming year. So the impact is a 25% saving in the cost of steel items and the other commodities. Similarly, the module prices which we were importing from China had gone up to 26-27 cents. It has now come down to 23 cents. And we expect that in next few months it will come down to 20-21 cents level. So that's the upside that we will get. So what we did, instead of doing all these projects in the first and second quarter, we have deferred it. And we have also taken up with the government of India, which has agreed, and also the beneficiary, that you can stagger the implementation of it. And that, I think, will help us to complete these projects in the next 2 quarters and take the benefit of higher margin.
Right. Just wanted to understand a couple of things. Since you said that Odisha will now start reflecting in terms of better performance from here on, I see the distribution losses out there have reduced by about 500 basis points. Going forward, how much better can they get from here on? And the second one is with regards to the renewable energy, your EV business. How big will that be, say, the next couple of quarters before we talk about your long-term targets there?
So Odisha, we have done a large-scale cleaning up in terms of there were a large number of meters which were not working or were legacy meters, electromechanical meters. Okay. We've changed nearly 20 lakh meters out of the 90 lakh meters. And that has helped us to bring down the provisional billing, which used to be something like 40% to average of 20%. In some cases, it has gone down to 10%. And we expect that the 500 basis point reduction, similar amount reduction will happen in the next quarters. So we really expect that the full benefit of Odisha Discoms will start coming in the subsequent quarter. And in FY24, you will see a substantially better results coming out of Odisha. Similarly, in our EV and other businesses, where again traction of electric vehicles has not been so much, notwithstanding the fact that it has increased from a base number. Once the penetration of electric vehicle takes place and utilization of these chargers takes place, I think we will see huge improvement in the margins also of our EV charger. Of course, in our home chargers and public transportation for buses, it has done well. But in the public chargers, we still have to see the type of usage that will make them self-sustainable. Okay.
Mr. Sinha, for the benefit of investors who are watching you, some numbers, what is the breakup in terms of revenue? How much comes from thermal, how much renewable, and how much from your EPC and Discom businesses? And if you can give a rate of growth for each of them, whatever you can perceive in the second half.
Yeah, so I think earlier, traditionally, we were 1/3 each in our transmission distribution, conventional generation, and in our renewable business. Now it is moving more towards our T&D business and renewable business. So what we are seeing is our renewable business and our T&D will become about 40% each, and our thermal and hydro will be about 20%. So that's the type of change that we are going to see. You've seen that in 2 quarters, our revenue has become nearly 28,000 crores. If you remember, a few years back, our annual revenue used to be 29,000 crores. And that's the type of trend change that we are seeing. And this is primarily happening because of the huge renewable focus and the huge focus on distribution and transmission. Okay. So going forward, we will see that sort of trend. And we have shared the numbers in terms of long-term projections, and I think we are committed to those numbers.
Okay, all right. Mr. Sinha, very quickly, you all had plans to quadruple the net profit in FY27 if you compare it with FY22. Now, you've given us a brief idea about the segment performance and how things are going to work out. What is there in this assumption? Do you assume that Mundra will turn around? And do you think that this coal profitability that you're seeing, which is, I don't know whether it's one-off or so, but it's looking very, very alarming. Do you think it'll remain the same for the next few years?
I don't think coal will remain the same for coming years. And in our projections that we had given that we will make it 4 times the profit, we have considered a very muted coal impact. So it's not that we have considered the present impact of coal. We have definitely considered that Mundra resolution will happen partly on the lines that what we are expecting from CRC. So that has been considered, but we are definitely expecting a huge growth in our renewable business and in our T&D business. So if you see again, we had last year we had a profit of something like 2,200 crores. In 2 quarters, we've already done 1,800 crores. And this is much more than what we traditionally used to do for many years where we were about 1,200. So I think we are very much on track to make it 4 times our profit. And I think we will deliver on that.
All right. Take that point, Mr. Sinha. Always a pleasure speaking with you. Wish you good luck for the coming quarters. Also, once again, season's greetings to you and your team. That is the management of Tata Power. The next 4 to 6 weeks crucial because that is when we will hear any sort of commentary coming in from the CERC on the Mundra issue. With that, we take a short break. On the other side, we have the management of SBI Card joining us to detail their second quarter earnings. An important one. Stay tuned. We'll also be joined by Mitesh Thakkar for a quick check on the market technicals.